Chris, finally dug you out and got you onto Real Vision. And look, it's really good to get you here.
Thank you. Yeah, no, I'm really excited. We've had a number of interesting chats over the years, so it's great to be here.
So tell people a little bit about yourself, because you've got a really interesting background and then really interested in what you're up to now. So what do you do? How do you even describe yourself now? Apart from obviously a guitar player, that's a giveaway.
a bad guitar player. I don't know. I suppose sort of a technologist, maybe. Sort of very, very excited by technology, digitization. The way the world's going, trying to sort of see the future, focused on this idea of a singularity and the path towards that. Thinking about how we might get there. I suppose that came about. I was actually originally an engineer. I did engineering at Cambridge and did a number of industrial placements. Got kind of bored of them. Just because of the nature of the work, it can be a bit slow. So thought I'd go into consulting, but then that was around the time of the tech bubble crash. And before I'd even started a job that I took, the job was no longer there. So I thought, screw this. I need to go into finance, be ahead of the game. So I ended up working at Merrill Lynch as a interest rates market maker and foreign exchange forwards market maker. And that was fine. But again, got a bit bored of that. So started just trading markets and trying to guess where markets were going, trying to think about future worlds, the next week, the next month, the next 6 months. And luckily found I was pretty good at it. And then went from there to Goldman Sachs on their GMP desk, their flagship sort of global macro prop desk, as it was called. And that was brilliant.
So what were you doing there? Because, that's all gone now. So what was that like? What were you doing there? So you come as a rates trader from Merrill, and you go to this ridiculous kind of global macro shop. Talk us through that a bit.
Well, it was amazing. I mean, the characters on that desk, you've got to bear in mind, this is sort of Goldman Sachs in the noughties, and people were coming into the office in their suits and, all very professional. We're rocking up in, shorts and trainers and T-shirts, and Jim O'Neill sort of stopping by the desk to say hello and, throwing around crazy amounts of risk. And, it was just fabulous because we were right in the middle of all of the big sort of macro events, whether it was Iceland going skewy or the financial crisis or Brazilian rates blowing up. You're just right in the middle of it, and the characters that I worked with were phenomenal, and for me it was just a sharp learning curve into portfolio management from frankly some of the best traders out there, and still to this day.
So what did you learn there about portfolio management?
Just
the style you established for yourself, I guess, because everyone's different.
Yeah. I think just how to build sort of diversified portfolios, how to think sort of from a top-down perspective, and how to smell a move when it's coming, how to investigate a trade. I did a trip to Iceland once, for example, to really get under the bonnet of what's going on and really understand it. But it was a great experience, And then obviously the financial crisis came, the whole world went crazy, and that was, wild to say the least. And then shortly after that, the Volcker Rule. And I thought when the Volcker Rule first came out, I'm like, Christ, I'm out of a job. What am I going to do? They can't employ me anymore. And then of course I realized, well, they've got to make me redundant with all my deferred compensation. And I can go and do whatever I want. So I ended up going to work at Tudor. Most of the guys went to Brevin Howard. I went to work for Paul Jones. I wanted to do something on my own. Felt like I was ready. And that was, again, just a phenomenal time. Paul Jones, I have a good relationship with to this day.
He's such a nice guy, isn't he? He was a mentor of mine.
Yeah, and he's so self-aware. For somebody so successful, he's so incredibly self-aware. I think that's one of the most impressive things about him. But obviously, Paul's true gift is really, he just drove into me process, and risk management. And I was always a very, let's call it excitable risk taker. That would probably make Paul laugh right now. I probably kept him up at night, but that was great. Tudor was some phenomenal years, and again, lots of exciting times. But my whole vision thesis for decades, really. And it probably started with Chris, the engineer, right back at university, but it's always been around digitization, technology, singularity, the impact the disinflationary impact that has. And then Donald Trump won the election, and obviously suddenly this is going to be phenomenal for macro. And I couldn't get excited about it. I thought, I can't get excited about meetings about the Fed dots. I need to get closer to the technology. So I actually resigned the day Trump won the election, for that reason, really, to start investing, my family office money, my money, in digital technologies, basically.
So what did you see? What was good? Let's go back a little bit to the kind of cryptocurrency Bitcoin journey. When did that come into your life? Why?
I would view this, I think you have to kind of zoom out like a long way to contextualize what's going on from a macro point of view and a technology point of view. So I know you and I both share a passion for messing around with our diets, ketogenic diets, paleo diets, etc. Now, one of the reasons I'm very intrigued by that sort of, dietary process is I think it's fascinating when you start to look at the long history of mankind, certainly the long history of the planet, and hominins, as in bipedal, apes, have been wandering the planet from 2.6 million years ago, right? Homo erectus was first found around 1.82 million years ago. Homo sapien arrived between 200,000 and 300,000 years ago, along with Homo neanderthalis. Then about 60,000 years ago, all these guys just died off, and it just became sort of Homo sapien roaming free. And all of this history of evolution of man, it was going on. It was like a hunter-gatherer sort of approach, right? It was running around looking for foods, and that was your life. Food was the scarce resource. Then there's this other fascinating aspect, which is Milankovitch cycles, which is like the sort of tilt of the planet and the elliptical orbit of Earth around the sun, which creates cyclical effects of glacial periods, so interglacial periods and glacial periods. And interglacial periods last about 20,000 years, and glacial periods last between 80 and 100,000 years. So throughout this long history of man, we've cycled in and out of these ice ages. And we came out of the most recent one about 14,000 years ago. And this is now called the Holocene. This is the current interglacial. So we're 14,000 years into a probable 20,000 year interglacial. And you start contextualizing that, and then you see, oh, okay, so when did the agricultural revolution start? Well, interestingly, when we came out of that ice age and people started growing in fields. So that whole hunter-gatherer era, which is millions of years, suddenly became this, well, not that suddenly, but became this agricultural era. And it was that agricultural era where the civilizations started being built. So people could be in fields growing food. They didn't have to be out spending their entire time hunting for it. So suddenly the scarce resource of food became actually kind of a scarce resource of arable land, flat arable land near water. So suddenly you had this epochal change. You went from hunter-gatherer world to agricultural world with a scarce resource of food to a scarce resource of land. And then obviously much more recently, we've had this era of the industrial age where the civilization and sort of enlightenment led to scientific process, and this more sort of industrial age, which is where I think most of our investment understanding and our economics understanding comes from. In fact, it's where all of it really comes from. And this whole idea of this time it's different or this time it isn't different, and pumping in too much money or taking too much money out. The industrial age is sort of characterized by perhaps the scarcity is more capital and capital stock rather than necessarily land.
Hence the business cycle, essentially.
Hence the business cycle and such like.
Hey, if you like this clip, be sure to like and subscribe for more crypto-related content. Also, be sure to check out the full interview and more only on realvision.com/crypto.